Welcome to this edition of Security and Compliance Weekly. It's March already, can you believe it? Today we're going to revisit one of our favorite topics to beat up on, namely cyber insurance. We're joined today by Lietzau and Mike Volk, who both work for a company called PSA Insurance, which is a leading insurance brokerage and risk management firm, and it's actually based right here in Maryland. So depending on how things go, I can get in my car and track them down later. Just kidding. I don't think we've ever interviewed any folks who wear suits in their biopics on the show notes. Go check it out. They look very dashing, by the way. They did take their ties off for our talk today. They're just in their buttons down. They are very enthusiastic about talking about cyber insurance, despite our best warnings that it's our least favorite topic and we like to beat up on it. So we'll see how the discussion goes today. We're looking forward to it nonetheless because they claim to be ready for us. So join us as we continue our journey of tearing down silos and building bridges on Security and Compliance Weekly.
This is a Security Weekly production. And now, it's the show that bridges the requirements of regulations, compliance, and privacy with those of security. Your trusted source for complying with various mandates, building effective programs, and current compliance news. It's time for Security and Compliance Weekly.
Welcome to episode number 63 of Security and Compliance Weekly, recorded on March 2nd, 2021. We are fast approaching the first anniversary of the day the Earth stood still and the world blew up. Does anybody know what that date is exactly? We'll have to celebrate it in some manner that's different from the way we've been facing every day for the last year. I'm your host, Mr. Jeff Mann. And joining me today are my illustrious co-hosts, Mr. Scott Lyons, Mr. Josh Marpet, and Mr. Liam Downward. Welcome, gentlemen, to the show.
Pleasure.
Good to see everyone. Hey,
good everybody.
If you guys have a specific guest or topic that you want us to cover on this show or any of our shows, truthfully, you can go to securityweekly.com/guest, fill out the form with your guest requests. We actually review those suggestions on a regular basis, especially once we've been prompted that the queue is filling up. Thank you, Sam and Andrea. And we'll reach out to you once we've completed our review. Also, if you missed Security Weekly Unlocked, which was this past December, you can now access all of the content on demand, whether you registered before the live event or not. Either go to securityweekly.com unlocked and click the registration button, or click the button to log back in. And in case you haven't gotten enough of us, you can listen to that content. Alrighty, as we introduced, we are pleased to welcome today Mr. Lietzau and Mr. Mike Volk to the show. Gentlemen, welcome.
Thank you.
Thanks. Yeah, happy to be here.
Excited to be here.
You look very dashing, both of you.
We took our ties off, yeah.
Thank you for taking
Yeah,
the
where's
time.
the suit jackets, man? Come on,
That would have made us feel a little bit nervous.
It's funny. I think the last time I wore my suit jacket was that picture. So,
And how long ago was that picture taken?
about 4 years. So it's
4
yeah.
years.
Okay. Good. Well, it's good to hear that you dressed down for the occasion. Appreciate that. As I said, you've been forewarned. We're kind of skeptical about the topic of cyber insurance, but we look forward to having a meaningful dialogue with you. I was thinking, Scott, since you were the one that encountered these fellows initially, maybe you could fill us in on, just how they came to be here in terms of sort of background, and then we'll jump into the conversation.
Yeah, no problem. Oh, and by the way, Jeff, the answer to your question is March 11th, 2020. That's when the pandemic was officially pandemicized.
Okay.
So,
and that was like right around the time of RSA last year, which seems like a million years ago. Remember when you and I were out in San Francisco?
Right before it.
Yep. Oh man. Anyway.
Yeah, you got back from RSA. I went out for to teach at the Misty conference. When I got to San Francisco, like I was literally the only one eating at restaurants. It was just empty. And I'd walk out and I have pictures of streets in San Francisco and the tourist district, and there's nobody there. And when I got home, my wife was like, "Oh, you made it home. Thank God." I'm like, "What?" She's like, "It's bad. Get in the house and shut up." Yes, dear.
Yeah, we had so Nickel had reached out to one of our people, Josh and mine's, over at Red Lion, and the individual that Nickel had reached out to sent me a message inside of Slack and said, "Hey, I just had somebody for cyber insurance call me. I don't know if this is relevant or not." And she said, "Well, I'm going to put him over to the main line." And I picked up, and Nickel and I started talking about things. And I said, even though we have cyber insurance, we have this podcast called SCW that we've had at least 2 episodes. I think it was, Jeff, correct me if I'm wrong, or Josh or Liam, episode 15 or episode 24. If you haven't seen them, I would highly recommend that you go back and take a look, where we've discussed cyber insurance, but it's been more of a axe to grind with the people that were trying to tell us that cyber insurance was the end all be all savior to absolutely everything going on. And back during those episodes, a year ago, looking back at everything, we believe that cyber insurance still has a lot of major issues, especially inside of how cyber is coming along today. And a couple of those issues we're going to talk about center around the inability, and guys, I'm going to come right out and say this, the inability for insurance companies to be able to say you need this much insurance for this much protection, and really right-sizing the amount of coverage versus the amount of exposure for businesses today. Nickel, I want to throw it over to you guys and say, first off, welcome to the show. And Jeff, if you don't mind, I'm going to take this for a second. Second of all, if you guys could go through and give a little bit of your background, and then we have a question that we ask absolutely everybody that comes on the show, and I would like to ask that to you guys, and then we get moving with this. So, Nickel, do you guys want to take it away?
Sure. No, thank you guys for having us. We're excited to be here. So my name is Nickel Lietzau. Nickel's a nickname. I'm Albert Lietzau V, but I was coined the Nickel as a young lad. So I've gone by Nickel ever since. And I've worked in my family business, which is an insurance background. My dad and my grandfather owned an insurance agency for 30 years, and we merged with PSA last spring, actually, April 1st, right in the heart of the pandemic. So relatively new to PSA. PSA is a regional insurance brokerage. We're top 100 in the country. And one of our specialties is in the technology and cyber fields. So I've been talking about cyber insurance for almost my whole career. Mike's been doing it even longer, I think. And so we are excited. We're boots on the ground. So we're a broker.
You calling him old?
But we're boots on the ground. So we're a broker. So we connect business owners that need or are curious about cyber insurance with cyber insurance companies. So we connect the dots. We go through the policies. We read all the policies. We make sure that the coverage provided actually protects the business, isn't just a blank piece of paper that won't pay any claims. So that's our art form at PSA.
Oh, Mike. Boy. Okay.
Mike,
wait for the intro is finished, Josh.
No. I just said, tell me when I can come off the leash. Okay, not a problem. Go for it.
Yeah, Mike.
Yeah, so I've been with PSA for about 4.5 years, going on 5. I came to this insurance from not having an insurance background. I was actually in cybersecurity education training, workforce development. So I guess the point here is that I'm not quite a insurance person, and I'm not quite a cybersecurity person. So I think it gives me a different perspective on this. At PSA, I lead our cyber risk solutions and technology practice areas. And I think our goal, and hopefully we'll dig into this, is not to make it look like cyber insurance is the end all be all. So I think that's hopefully one myth we can dispel through this, but help our clients learn about what cyber risk is, how it impacts their businesses, how to build cyber insurance into your risk management program, not to say, buy cyber insurance and you're good. And I also would say, because of where I came from, how I got into this space, A lot of the questions we'll probably talk about today are questions that I've had and where we fit into the chain. So like Nickel said, we're not the carrier, so we're not doing the underwriting. So when we are collecting the data, we're working with our cyber insurance carriers. I think you guys had a carrier or a wholesaler on the program. So there's different pieces of the puzzle, and we're kind of in between the client and the carriers that are actually writing and doing the underwriting of the policies. So our goal is to make sure, our obligation is to our clients to make sure that they get the best coverage for the best price, but also help our clients manage risk in a way that is smart and the way that is forward thinking. So, looking forward to the discussion. I know you guys will have some hard questions which we're hopefully prepared for.
Okay. Hey, I have a quick question, Scott, before you jump
Jeff.
into the hot seat question. And I'm not asking to reveal trade secrets or anything like that, but just out of curiosity, when you say you're an insurance broker, my bottom line question is, who's paying you when and how, and whether things are successful or not, and how does it differ from like financial brokers and brokerages houses and things like that? Could you just, how does it look in your world, just to clarify?
So let me, and Nickel, jump in here too. So I guess the best way closest way I can relate it to the technology space is we're sort of like a value-added reseller. So we're actually representing different carriers and helping our clients access them. And insurance
carrier,
is licensed.
You mean
insurance company?
Just for definitional sake, for carrier, an underwriter, the same thing, or? So
an underwriter is the person that reviews the risk and then actually develops the premium and pricing and coverage. So they're our immediate point of contact to the carrier.
Okay, so they're an employee of the carrier. They're the specific person at the carrier who prices the risk. Yes.
Yep.
Cool. Thank you.
And then the way that we're paid, and this is not a secret, it's commission. So whatever the premium is, PSA is compensated by a percentage of that. So, and what I think makes us unique is that doesn't change for the other things that we provide. So you could go to anybody, pay essentially the same price. The broker is getting paid the same amount. We're trying to add additional services on top of that they're probably not getting from the carrier. So that's our approach. And again, I hope that it comes off that we're really trying to make sure that our clients understand risk. In addition, as you guys know, you've talked about this, the policies are incredibly complex. Every carrier approaches it differently. There's different language. So you turn this over to a business that doesn't understand insurance, doesn't understand cybersecurity, and then expect them to make an informed decision. It's almost impossible.
Okay. Are we going to ask the hot seat question?
Yeah, yes, Josh, if you want to take and go for it.
Okay, so I didn't want to step on toes before we got to that point.
There's something I want to ask right after the hot seat. But if you want to ask it, go for it.
Okay, so hot seat question, gentlemen. This is a question we typically ask our guests. It's fascinating to us. Jeff, correct me if I get it wrong, but basically, we want to ask your opinion of compliance and security, and potentially how they interrelate.
I'll jump in. So I think compliance is important because it pushes organizations to do things that they normally wouldn't. However, I think what we often find is that compliance and security are confused. I think security is its own separate entity because being compliant doesn't always equal being secure. And I also think when you get into an organization, you've got compliance folks dealing with compliance requirements related to maybe contracts and other business related things. And then you've got security people on the other side trying to secure the organization. And those things don't always mesh. So I think there is, they are both necessary and work together, but I think we are still trying to bridge the gap between them. So that's my quick answer.
I honestly, that's a very good answer. I respect that immensely. I think that makes a lot of sense. Like you're seeing the value of compliance and security, and that there needs to be a bridge between them, but that a lot of organizations are still trying to bridge them, if I heard you correctly.
Absolutely. Yeah.
I respect that. That's a solid answer. And now we've got lots more questions. No, go ahead.
Yeah. So what I really want to do is I want to kick our conversation into high gear and put the throttle down. What I want to do is I want to start.
Can we hear from Nickel on the hot seat question first?
Oh, good point. Good point.
Let's be fair.
What do you think of compliance and security, sir, and their potential interrelativity?
Yes.
Not including Einstein's general theory of relativity, just the compliance security relativity. Sir.
Thank goodness. Good. No, security at the end of the day is paramount for any organization, and compliance is somewhat of an enforced incentive. So you're going to have to go through compliance steps for the insurance companies. You've got to go through compliance steps with the PCI folks. And it's just balancing that act, because you can't spend your entire budget on all of those things, because then you don't have a business to run. So I think to Mike's point, there's a bridge between the two that's very important to uphold. And you have to look at the big picture. You just can't be 100% compliant or 100% security focused. There's a balance between the two.
Okay. And another good one. Another good one.
Unleash hell, Scott.
Unleash hell. So let's kick this into high gear. I'm going to start with a problem statement. And the problem statement is that the problem that most companies face is in determining how much cyber insurance they need. But it's difficult for insurers to understand demand when the buyers themselves are still trying to figure out both their exposure and their buying appetite. With around 250 companies buying at least $200 million in protection, it would only really take 5 insured losses of a bit more than that amount to wipe out an entire year's premium. And really, that's only 2% of companies in the market that are buying that much coverage, right? That kind of loss would likely take decades for insurers to earn back such losses. So I want to open this up with, do you guys agree with that? Is the exposure and the buying appetite the issue? Is it the actuarial tables to define how much for what? Is it that companies don't know exactly what they need and how to protect their assets, like they're not doing the basics? Or is it that companies are focused on, let's get sales out the door, damn the torpedoes? You know, how would you approach that, and how would you open up to say, well, that's not true?
We thought we would lob a softball question at you.
Lightweight,
so please.
Totally
that's a lightweight question.
Scott, great question. Multifaceted, certainly. The insurance marketplace is still very much in its infancy when it comes to cyber insurance. To your point of, let's just get as much sales in the door as we can, I think absolutely underwriters have just been eager to bring in premium regardless, damn the torpedoes, to use your phrase. I think it's been to the point that up to this point, underwriters have thrown darts at dartboard to figure out how to price this. They don't even know, because they don't really understand the risks and the security compliance behind it. So this line of insurance is still very much in its infancy, but it's maturing very quickly. Mike, you've seen this, that insurance companies are really starting to come down on controls and understand the risks better and start to price it better. I mean, we're seeing a lot of price increases because I think we're getting a better handle on the risks, and we're also seeing limits come down. Ransomware limits and cybercrime limits are nowhere near what they used to be, because claims keep happening and insurance companies keep losing money. So the insurance marketplace is responding to their losses, but also the needs of the customers.
Okay.
And I'd like to add to that if I can. So I think in general, and I think this is where we're getting to, it's a better idea to take risks. So if you're a carrier, take risks that you can measure rather than try to measure the risks that you're taking. So I think we are stuck in the measure in cyber, especially measuring the risks that we're taking. So we're trying to, it's a new risk. We're trying to use past data to justify premiums and examine risk. And I think we can all agree that that's just really not possible in cyber. And when you don't have enough data, it's really hard to say, this is how we will project our risks in the space. And I think historically, that's what's led to some of the concerns that you guys are raising, where you've got all this coverage that's now out there that potentially could have been underpriced. And I think what it's going to take to catch up is some type of corrective event. which we may be starting to see kind of the rumblings of, where there's some pain before it changes. And I think the other piece here is that the insurance industry is built on a model of using past performance or past data to understand risks, or using the law of large numbers. So you get enough coverage out there, you're going to have enough premium in the pool to cover the exposures. And again, I think we can all agree that it takes.
That's not true here.
Yeah, it takes it could take a very small, or it could take one event to eat away at all of that. And I think the insurance industry, as Nickel pointed out, is learning. Unfortunately, it's very hard for it to happen overnight and instantly. There's going to have to be some pain again, which is what we're seeing now for things to correct. And we're starting to see that. So not only are we seeing the limits potentially lower, we're also seeing capacity drop. So any one carrier is not going to be able to put up the limits that they used to. Reinsurance also goes into this. So all the insurance carriers that are writing insurance policies are insured by reinsurance to spread the risk out. What's that?
So I gotta stop for 1 second and tell you that right now we literally have 3 pages of questions on the Discord for you.
Yeah.
Okay. So this might take a little while.
Yeah.
This is a huge topic for us, and not just for us, but for all of our listeners, for all of our viewers. So I incredibly respect that you guys have come on. I want to start off with that, and I cannot thank you enough. This is one of the heaviest topics around. There's a lot of new standards coming out. There's a lot of things going on in the compliance world and the security world. But when it comes to understanding how we hedge our bets as security and compliance professionals, quite literally, cyber insurance is one of the 4 ways you handle risk. Okay, you can accept, ignore, mitigate, transfer, etc., and remediate. Sorry, but I mean, insurance is monstrous. And we don't understand it well enough. There's not enough actuarial data, which is what you mentioned. Okay, there is, and I'm okay. Let me start at the top. You guys are brokers, agents.
Yes.
You then hand off to an underwriter / carrier, and then they can hand it off to a reinsurance. Have we covered the chain effectively? Are there any other pieces in that chain? Are there more levels to it? How deep does it go? How is it turtles all the way down? Talk to me.
I think that's the basics, but then you also might have intermediaries that are essentially brokers for brokers. We don't need to get into all of that. Okay. There's also, the way it's regulated, but I think essentially you've got it.
Okay. So there's the agents that are out there being the sales agents for you want this, you want that, you want the other thing. We handle it. We work with various carriers. And these you need this for this. Well, that carrier doesn't handle that, but that carrier does. Let's go talk to them. And you go talk to the underwriter. You put the data in front of them. The underwriter says that's going to cost $1,000 a month for this level of coverage. You go back. You say you want that. They go yes. They sign. Here you go. You get your payment out of the premiums that they pay. You get a commission on those premiums. Mm-hmm. The underwriter hands it off to his carrier that he's an employee of. The carrier then hedges their bet by potentially using a reinsurance company, basically aggregating more and more and more carriers together. As you said, the law of large numbers. So that was the system, and I just wanted to go over that so we're all operating off the same list, the same sort of script, if that makes sense. Okay. Now let's start talking. Okay. We don't have enough actuarial data. We don't have enough information on how to price risk. Anybody that says they do, I'd love to know where you get your data from, because we don't. The first question that we wanted to ask was, let me be blunt. Why do you care? Because Scott and I, literally, how many years ago was that, Scott? 3 years?
Yeah. About
3 years ago.
Three, maybe 4?
It's somewhere in that nature, right? 3 or 4 years ago, we went and interviewed, I don't even know, 2 dozen brokers, mm-hmm. and 6 carriers, and got in touch with some reinsurance people, which are hard to get in touch with, dear God. Mm-hmm. And the brokers could care less. Okay. And the brokers could care less because they get paid on signing a policy. They don't get paid on claims percentages. They don't get dinged on claims percentages. They don't care about claims percentage. They just care about signing policy, which, by the way, if it sounds like 2008 in the real estate industry, it felt that way to us.
Try 2003.
Okay. But like The Big Short, you could have written that about the cyber insurance industry for a while. You know what I'm saying?
Yep.
And tranching bad deals and bad deals and bad deals together, especially as ransomware starts creeping its ugly head up, we're like, ooh, that's gonna hurt when that hits. And it did. How many carriers got smacked really hard for ransomware? As you said yourself, ransomware is driving premiums up. It's driving massive problems. So let me get back to the question. Why do you, as a broker, as an agent, why do you care? So why don't you just signing policies?
We care because we work for our clients are business owners, and we want to make sure that they're protected. This is a giant risk to their business. And
this was a softball for you, just to be clear.
So we care because our clients are, and often, for me at least, being good friends of mine, and I don't want to see their business go down the tubes because they experience a data breach or ransomware attack. And so this is a risk that their business faces. And if we just said, I don't care, then I wouldn't sell them the policy. I do care about their business. I care about their livelihood. And so I want to make sure that this risk can be transferred to an insurance company instead of written off their own books.
But strictly in terms of bean counting, forgive me for a second, I'm going to go straight to the bottom line here. Strictly in terms of bottom line, you shouldn't care. Because when you care, it costs you money, right? It costs you time, effort, and effectively money to care, to make sure the insurance is appropriate, to make sure the insurance is big enough, large enough a pool to get in, to make sure that their premium is lower, to make sure that, and any minute that you take to do that costs you money that you are not remunerated for. Am I correct or am I wrong?
So I don't think the analysis of the policy, the helping clients understand the risk, or the limits that they should buy, that's I don't think that is, but I think where you potentially do run into an issue where a broker could say that they don't care or they don't have the expertise is the other side of it, where you're talking to clients about risk management and cybersecurity best practices and all the preventative controls, because that absolutely does. Because as I mentioned before, we have no compensation for that. That is just a part of our process, a part of our business model, because hopefully we do care about our clients and we want them to be I And I think you would, you guys are intelligent. You look at this industry and you say, this is a bubble. I'd be stupid to say that we haven't thought that. So the other piece of this is we've got to get our clients starting to think about how to manage cyber risk, because this industry, the cyber insurance industry that we see today, this is not going to last forever. And at some point they're going to have to do this, do the right things to manage risk to get a policy, and it's happening.
Well, can I just interject? So why don't we just do this? Ask the question of, we got a company, I'll give you a scenario. We've got a company that has cyber risk, and a virtual CISO sat down and asked them and says, hey, you need to engage with cyber liability insurance or do something around that. So how do you guys engage? What are the steps to work with that client to say, okay, what you can offset to insurance and what you can't? What is the checklist of the things that we expect to see in order for you to get through the approval process with the underwriters and so forth to then identify risk? So can you step us through that process to show us why you guys are different from maybe what the stereotype is of a broker or an insurance company when it comes to cyber liability insurance?
Good question.
Mike, you want to take the lead?
Yeah. So when we start, so it is challenging because there's two pieces to the equation. So part of it is a lot of the businesses that we're talking to will look at a cyber insurance premium, and we can sit here today and say that it's probably underpriced, but it's a new line item for them, and it's more expensive than they're potentially willing to pay. So there's the price and all of that comes into play. And what the other thing that we've got to take into account here is that we are asking questions based on what a carrier or underwriter needs to place the policy. So when I started 4.5-5 years ago, we had, ideally we had like 6 to 8 pages of really good questions that were hopefully pushing people towards like looking at a full-blown assessment. And that wasn't competitive. Like we couldn't get people to answer that, and they could go to 15 other brokers and answer 3 questions and get a policy. So what we're trying to do is balance what we can do from being competitive in the marketplace and what our carrier partners need to write the policies. So what we've actually done is taken the everything that our carrier partners need. So think of the insurance companies that you're all familiar with. We've created our own applications that we hope dig a little bit deeper than what you would probably get if you're just, it used to be, honestly, you could get a policy with the type of business, the revenue, and the address. I mean, a couple of years ago, which is just insane, which we were trying not to do if ever possible. So we have a series of questions that we have to ask. The challenge is that we can't validate them. We're not inside of a network. And I think you kind of have done your research. You know that the way that a lot of insurance is validated or controls are validated are external scans, which really doesn't give you a very good picture. So the insurance buying process only lends itself to so much that we can do up front. Where we come in, I think, is after the fact. So instead of
why?
Yeah, go ahead. Yep.
I'm sorry. I do mean to interrupt because I need an expansion on that one point. What you just said was, and thank you, Scott, for the backup there. What you just said was, we cannot get validation of the questions, the sort of the questionnaire that you prep the policy with, because we only come in on the aftermath, and then we can get validation. And the reason that you get validation then is not you specifically, but insurance companies are looking for reasons not to pay. Okay, let's be honest. So if we can get validation ahead of time, why wouldn't we? Why don't we validate before or during the course of the policy?
Yeah, and this is where it gets into cost. So the majority of our clients are going to be the small and medium-sized businesses, and the premium doesn't justify doing a full-blown cyber risk assessment, and we can't get in a network. If we could put some type of device in a network to collect the data to do this type of thing, then we would be able to do it. But you got to also think that the smaller the business, the less of a traditional network that they're actually going to have. So it's harder and harder for us to figure out ways to cost effectively validate that. And this is where I think the insurance industry is struggling, because you could have 15 different companies with basically the same set of controls. One's going to get hit with something and one's not, or the rest aren't. And there's really no way to figure out exactly why that happened ahead of time.
Wait. I'm gonna actually back up and say something about that, because you just invalidated the law of large numbers, which you quoted earlier.
Absolutely. No, yeah.
Let's be honest. If you've got a pool of, 15 companies, and let's say they're identical companies, we've rubber stamped companies, tunk, okay? One of them's going to get hit. I agree with you. If it's not more than one, let's be honest. But okay, let's just say one of them gets hit. The point is, over your pool, you're supposed to judge the risk accordingly, so that the premiums that they pay will pay for the amount of issues, accidents, contingencies, whatever you call them, over the lifetime of that policy. That's kind of the point, right?
Yep.
So if we can't understand how many of our client pool is going to get hit, and congrats, Johnny, that's awesome. And Johnny, if you want to announce that, I'm willing to let you happy to let you announce that on air. But Johnny's going 1 year, no alcohol as of the 13th of this month.
Yay,
bravo, Johnny.
Congrats, man.
Sorry, that's just so awesome. I had to say something about that, because that's awesome, Johnny, and I mean that seriously. Well done. No problem. Okay, getting back to insurance. So you've got the pool. If you can't adjudge the risk ahead of time because it's cost prohibitive, then what's the point of cyber insurance? We're gambling at that point. And I'd rather go to Vegas, go to Frankie's and have a tiki drink than gamble on cyber insurance.
And to be honest with you, I don't want to plug Progressive into my network.
Exactly. Well, that's another great point. Who's going to let somebody in their network, and that nobody's going to look great? So
not necessarily true. I mean, you mentioned it yourself. Smaller companies are more likely to be cloud centric. They're more likely to be, either a hybrid or a virtualized network. Most of them are actually going to be fine. They're using Office 365 and Salesforce and like Box.com and things like that, where the security is handled for them. So
but it's funny because Another thing we find with the smaller companies, they're not doing like multi-factor authentication. So if somebody gets into one account, they're screwed. So it's like that kind of conversation that we have to have.
And that's good, and that's good, and that's a good point. But my point is that if we have a standard that we can hold them to, and it's set up on the basis of here's your hybrid environment, or let's just call it your virtualized environment, your cloud environment, okay? If you what's that, M? If you can't assess it, there's going to be a payout. Don't sell them anything. Interesting. So if we can give them a standard and say you need to meet this standard, and we've got, Jeff can quote PCI you until the cows come home, right by his house there, and I can quote CMMC and so on and so forth. But if we can hold them to a standard and say, here, you're a small company, do these 10 things, do these 20 things. And not are you doing them and check yes, and if you just check yes, we'll sell you the policy.
Yeah, but that's extending checkbox culture, which absolutely sucks.
That's my point. Instead of doing that, we should say, here's your assessment. Prove to us that you're doing these 15. I'm making this up. 15 things, 20 things, whatever it is, and show us this evidence. And rather than do an assessment, like give it to them to show you. But instead of going at the end, you didn't do something right, I'm not going to pay out your policy. Start at the beginning and say, show us that you're doing these 15 things and we'll sign you a policy.
So
why don't we do that?
Everything that you're saying is where we need to get to. I think the problem here is that we've got an immature market, and historically, and again, this is changing. Let's say I'm working with 10 insurance companies that I could place business with, and 5 of them say you're going to have to do a lot of extra work to get the policy, and the others say that you don't have to do that. The clients are always going to go the easiest way to get the policy. So trying to get every single insurance company to agree to some level of standard and commitment is almost impossible, because they're all independent companies trying to gain market share right now. And
so
that's
exactly the same question I started with you, which is, why do you care? Because every moment that you care is cost that comes off of your profit. Because if you care and you spend the time to care, you're losing bottom line. And what
is that true in security and compliance too, Josh, or is that just insurance?
Well, I mean, in a sense, it is. If you care about security, you spend time, effort, and money on security. But we have certain standards that we have to meet depending on the line of business that we're in. FFIEC if we're a bank, or NCO if you're a credit union, PCI if you want to take credit cards, right, Mr. Jeff? And so on and so forth. CMMC if you're a federal contractor. Before that, it's 800-171, blah, 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 blah. And we have to prove to them that we are doing these things, okay, to the appropriate certification and accreditation authorities. What I'm hearing from insurance, and I'm not trying to come down on you, please understand. You said it yourself. It's an immature market.
Where do we need to get to? Why is it an immature market, though?
It's an immature market because companies don't want to spend the money to get the proper amount of insurance, nor do they know how to quote it effectively. The market is immature because of the size of the spend. There's no money
for all the things that we've been discussing and for all the questions.
I get that, but I think but cyber liability insurance has been around for 10 years or more, so it's not an immature market. I don't think they've grasped the concept of what good they can do to help companies to become more compliant and secure, or the loss of not getting the payout. I just don't understand why people, and I've heard this many times, cyber liability insurance is an immature market. No, it's not. It's been around for a long time. It's just how they portray themselves to the industry.
It is. And I'm actually going to answer for them for just a second. You can tell me if I'm wrong, guys, and I'm really curious to see if you think I'm wrong. It's an immature market because insurance has always, traditionally, up until now, been based on actuarial data. That is where the entire insurance world lives in statistics. And with cyber insurance and cyber security, we cannot do that. If I smack my car into a tree, I have an accident, in other words, whatever kind of accident, it is more likely that I will have another accident. It's nothing against me personally.
I think the problem is Josh has been flying around on warp speed this whole session.
Sorry.
We're well into it. It's been a great conversation. Let's take a quick break, come back, and continue. So hold the thoughts. Be right back.